Hello, everybody. Thanks to the organizer and Oliviero for inviting me. As for those who don't know who I am, I work in the European Commission. The usual disclaimer apply. So basically, whatever I tell you are my own opinions and don't imply that the official view of the European Commission. What I would like to do with you is just to provide a simple case of how a specific topic, like in this case the MPL, is debated in Brussels, to give you a sort of a flavor why certain things don't happen overnight, and why there is the need to decompose different views, and basically, to really give you a sense of why proceeding sometimes takes time and is not a straightforward process. Before I do that, I would like, however, to just follow up on the question from Ed on the capital requirements. And I really think that what Mario Nava was presenting yesterday was this idea of what still needs to be done. And if you remember, there were these four boxes, and one was we still need to improve growth, and one of the, let's say, boxes, containers that we have to do that is called Capital Markets Union. Various different action, etc. But one that the Commission always attached particular importance to is the idea of allowing banks once again to use securitization. That is what Federico just recalled, that was approved 2 weeks ago. And I really think that that's the idea, that one of the lessons of the crisis has been that we cannot rely only on banks, because basically if we do that, and in Europe we've done this mistake in some sense, not finding a plan B or alternative ways, we find out that the behavior of the financial system gets extremely procyclical. So basically, if you have another line of funding that can come to the market, then you can avoid these lumps in the GDP. But the problem is that for the structure of how Europe works, it's very hard to find out somebody that can select the SMEs rather than banks. So basically, the idea is to have the banks as an intermediary that helps the development of markets, because they are underdeveloped. So that's really why I was so much supportive of the idea of Federico. So let's go back now to the MPL. I was telling you that there's been a debate on MPL, and the debate has basically developed according to various lines of thought. First thing that was debated in Brussels was, well, we shouldn't really concentrate on the MPL, because the MPLs are a consequence. What you really have is a problem of productivity. What you really have is a problem of lack of innovations in the real economy in some countries. So that's where the problems lie. That's where we should concentrate our action. But the problem is that if as you can see in this chart, very easily you have, and some others were saying, well, also, it's something that is not gonna be here forever. But as you can see in this chart, the MPLs were piling up, and then it's not so obvious how you make them disappear all of a sudden. So in some sense, we lost some time debating on finding a solution that, of course, was an important solution, because the productivity problem is there. It's just that you don't raise productivity in 1 year or in 2 years. It's something that is long-term. And the problem is that the MPL come up in a few years, and the problem is there, and then you're left with two problems instead of one. So that was a little bit already one of the sources of the delay in acting. The second thing that most Americans maybe are not so familiar with is that Brussels is a place where, it's like a compensation room. So you have different interests that come in. Now, if you look at the dispersion of the MPLs, well, you clearly see that not all the countries are in the same position. But what is also most relevant is that the EU average is here. So basically, you're left with some countries with really are belly up, Cyprus and Greece, some other that have piling up problem or something that has relatively stabilized, but then you have got many important member states like France or Germany, the Netherlands, the UK, Sweden that say, hey guys, this is not a European problem. This is really something that is a national. So this is another level of discussion. The fact that when you meet in the council, the Swedes are supposed to take the Swedish perspective into the debate, and the Italians the same. So it's difficult to really find out a way to move forward together because the situation is very different. This doesn't mean that the problem is not relevant. This has been more or less what the Commission has been trying to say in order to find a common ground, saying, well, maybe on the previous ground you think that in France there are no MPS, but then if you look at the billions of euro of outstanding amount, then you see that it is a relevant amount. So what basically Europe can do here is to put together these numbers and basically create a process that maybe has certain common standards and certain ways of proceeding in order to facilitate the situation of some countries, like, for example, I don't know, let's take Romania, for example, in terms of the percentage level of the NPL is high, but then the volume is very low, and basically they cannot develop a market on their own. So we need to have something that also provides a solution for small countries that alone don't have the numbers to do anything about it. And this was already a good, let's say, constructive piece of debate that the Commission tried to put into the NPL's discussion. Then the other thing that was also, let's say, complicating the debate is that if you look at how the MPS have been generated, you have basically three types of countries. Those that we have already mentioned, which is the dark blue, that do not have MPS. So basically they say, I don't know what you guys are talking about. And then you have two other sorts of countries in which the MPS have an ordered generation path. They started before. And so now they are somehow stabilized, and the problem is that they don't go away. So it's really a legacy issue. And then you have some other countries where instead the piling up of the MPS is much more recent, and it's also much higher. So you have a situation in which you don't really know whether the situation has stabilized or not, or if it can get even worse. And you also see that the systemic consequences of the situation might be different from what you have experienced a few years later in other countries, because the percentage of these loans on the total is much higher. So also, when you talk about the NPLs, the debate was that somebody had in mind legacy issues and somebody had in mind financial stability issues. So that was also complicated, I think. Now, regarding the financial stability here, I just try to well, it is cut at 100 there, so of course for Cyprus and Greece it goes much higher. But I try here to put a relationship between the net NPLs, so net of provisions, to the own funds. And as you can see, well, there are obvious cases where you can think there is a systemic let's say, element, Portugal, Italy, and then there is a series of other issues where other countries where, once again, 50%, 40%, it is debatable whether really this is, the most important thing to deal with. And also for those countries where, for example, we're talking about Italy, where you have an important level of NPLs, the debate was somehow also complicated by the fact that most of these NPLs they come from loans to corporates. The NPLs rate on family is much lower all over the place. But concentrating here on the loans on corpus, then the issue is, take the case of Italy, for example. I've got these loans, but I've got guarantees. I have financial guarantees, or I have collateral. Or in any case, the banks have already made provisions on that. So basically, the situation is under control. And then the debate would move forward with people saying, well, I understand that there are these financial guarantees, I understand this collateral, but I'm not really fine with that, because if I look at your judicial system in Basilicata or other region in the south, it will take 15 years, maybe, to get that collateral. So basically, all of this is on paper, and the debate would go back and say, okay, but then we need really to do something on this judicial system. It's not about the NPL. And so that, you know, just to give an idea of how many factors and elements were really not polluting, but complicating the debate. In this complicated debate, the point of view of the Commission, that always tried to facilitate the debate and try to find a constructive way forward, apart from this idea that some countries simply couldn't get rid of the NPL because the volumes were too low, was basically to say the following, a simple point. We clearly see that the NPLs are concentrated on the corporates. And we clearly see that when the NPLs are piled up, then for some time the lending stops. And it's like when you get drunk and then you have a overhang. It lasts some time. You don't recover the next day and everything is fine. You must have special skills for that. So the point that the Commission was trying to put into the debate was that, okay, certainly there are various elements here, but what we cannot afford is that for some time, in a situation in which after the financial crisis Europe has stopped growing, that we lose a big chunk of the financial, of the productive system, simply because the bank are looking backward on the mistake they've done, and they're not able to service the SMEs and the other corporates. This is simply something that would kill Europe. So we really want to do something on this because we cannot afford that. And in order to substantiate that, we have tried also to make this point that in countries where basically the piling up of NPLs has been able to be managed and stop, basically you could see that the propension of corporates to invest and to expand their business that was reducing in the previous year would stop. So basically, to put it very simply, the narrative of the Commission has been: if we are able to deal with the NPLs, if we can treat them, there is a good chance that this will help the stopping the decline that we have in the investment rate by European corporates. And this is exactly what we want, because the big problem that we have in the lack of growth in Europe is basically drag is really created by the fact that there's been a massive reduction in the investments. And we saw that immediately at the beginning of the financial crisis, and we also saw it during the Eurozone crisis 3 years later. Anytime that there is uncertainty, anytime that there is a problem, the immediate reaction of the productive system is we don't make plans for the future. We try to stay at the window and find out where the system is going. So basically, if in this way, the NPL problem is also an issue of aggravating the uncertainty. It's also an issue of creating further depression on the mood of the entrepreneurs, on how they can, or what they can expect for the future. So the point of the Commission is that, okay, maybe it's not really a financial stability issue, maybe it's under control, maybe it's a legacy, etc. But clearly, this is something that accumulates all over Europe. It's the lack of investment, and we need to do something. And who invests are the entrepreneurs? And if we get rid of the NPLs, probably we can help the entrepreneurs invest once again. So then this point more or less was received, and then the devil is in the detail, and all the discussion moved, okay, what should we do? And then, of course, you have people saying, no, I need a short term because it's something really pressing, and somebody saying, no, I really need something which is structural. And but we've seen that something should be done at the EU level and something should be done at national level, etc. So the overall conclusion of the debate on what the strategy should be is that there is not a single tool. There are many things that needs to be done, and probably at the same time for different objectives. Some, to help specific countries, some to help growth in general in Europe, and that these things all must start because we have lost too much time, so to say, to understand what was going on. So the first, and then the issue moved once again, and this is what I would like quickly to go through with you. That was how basically to help the banks go through a dismissal process of their NPLs. Now, the situation that we have in Europe is basically that for various reasons, the fact that Europe is based on a single market and on the fact that we have had World War II, where the states were basically subsidizing the war industry, etc. We have this thing which is called EU competition law that basically limits to very specific situation the state aid that can be given to companies. So basically, because of the setting, it is not simply possible that the banks receive any aid of any sort. It's not the BRD. It has always been like that on a structural basis for basically allowing the public money to absorb losses. This is a myth. In fact, people think that the BRD has changed the game. No, it has always been like that. The only thing that the state aid allows is basically to use the public funds to intervene to accommodate problems coming from a malfunctioning of the market, and in particular the fact that if, as the market is not functioning, if you dispose with a fire sale your NPLs, basically the losses that you would generate from your net book value would be much higher than the loss that you would be able to generate and limit if you had the time to work out your NPL portfolio. So this has always been like that. The BRD has not changed this situation, which basically determines the fact that there is a limit to the possible intervention of public money in solving the NPL in the NPL problem. So the losses here clearly that the banks must absorb in any case are those that are in between the net book value and what is called the realization value of the market in normal market condition, if you're not fire selling that. So the issue is how to make sure that this amount of money can be, this loss can be absorbed by the banks. First, if the provision are not enough, and the banks are not generating profits, you are in trouble because basically your net book value will be too high, your realization value doesn't go to the sky, and this loss will be very important. So the critical thing here is that this is what we have constantly been saying to the banking industry, is that the world that you live now is much different from what you used to live in, you have to restructure. You have to be able to make profits. You cannot keep on having the number of branches that you used to have. You cannot keep on having a situation in which your cost income remains what it used to be. Monetary policy has changed. You don't have anymore the kind of yield curve that you used to have, 380 basis points for your margin. You need to do something. So we've been trying to responsibilize the banks. Now, of course, there are countries in which these messages are easier to pass, and you've seen also dramatic changes in the banking structure. Like, for example, I got in mind the Netherlands, that reacted strongly with the banks to the debt overhang problem that they are there. And you have some other countries like Italy, where instead you have labor laws that make it extremely difficult to fire people. And so when you talk to the Italian Banking Association, they tell you, we've done a lot. Yes, we have closed X hundred branches. And then you look at it in comparison to the other countries, and it is less than half of the second worst other country. So in a sense, there is an issue of that the message must pass to the banks that this NPL problem will never be solved unless they are able to generate profits, basically. So they have to restructure in order to do that. So this is the first condition. And then once that this message is passed and understood, there is a certain level of things that can be done in order to minimize the loss. And basically, it's creating transparency on the market, making a little bit of order in the information that the investor can receive. In recent cases, once again, in Italy, it's a good school. The banks were not able to have a decent data tape to give to the hedge funds that were willing to buy their NPLs. And so it's only basically enlarging, diversifying the number of investors and creating conditions in which the data discovery, the price discovery is on the true value that you have behind the NPL. So the standardization also of the portfolio, the segmentation of the portfolio, that it is possible to generate value and reduce the loss for the banks. Now, is anything happening in Europe, or are we still, at square one? Well, our impression is that there is a lot that is happening because the banks have clearly understood the message that they were unable to manage their NPL portfolio, so there have been big investments in the teams. Also, from a corporate government perspective, most of the time the people dealing with NPLs, they were in the commercial function, and the last thing that the commercial director wants to know about is NPLs, because he doesn't see how that can generate the margin that he's supposed to deliver according to the budget. And so it has been also very much a cultural, let's say, important change now that the NPL resolution unit internally in the banks reports directly to the board or directly to the CEO, bypassing the commercial director. Then there's been clearly a lot of efforts from the institution, for example, the SSM, but also the Bank of Italy, in creating data, in creating procedure on how to handle what is expected by the banks, because also the problem was that there was a wide range of practices. Just to give you an example, last year I was part of the European Commission team going to Italy and having talks with the institution for what we call the European semester. Basically, it's a sort of annual report on how the country go, and there is also a section, of course, on banking. I was part in those discussions, and we were also talking to the banks. Now, some of the banks would very bluntly and openly tell us, look, I don't have a problem. The reason why I don't have a problem is that I've got a very high level of NPLs, but the level of the collateral is very good. So we go back to the discussion. And these people, I know them for the last 20 years, so I know that it's just a matter of a liquidity, but the investor buy that. I mean, unfortunately, that's the problem. Because then, you know, the information would be dispersed, would not be able to be communicated to the investor in a consolidated, and basically the only one who would know the situation would be the manager of the local branch, and there would be no possibility. So you have to believe these people and no possibility to have a full picture. And they would tell us, I mean, coming from us, which we found a little bit astonishing. But I think that this cultural change has already happened. Plus, of course, there are other things which are happening. For example, once again in Italy, on making the judicial system work better, on being able to realize the assets, being able basically to repossess the assets in a decent level of time. And other, for example, very small, tiny changes in the bank behavior. For example, Intesa San Paolo always tell us that since they started participating in the auction done by the tribunal in selling the assets of somebody that was declared bankrupt, they saw a spectacular increase in the value of the assets, and they could recover basically the double. Now, so you see that the solutions here for this issue are entrenched in different layers of complexities, and all these things must happen at the same time. But we're moving forward a solution. That is what I would like to tell you. So I will skip these things. I will just stop here as a conclusion. So where are we on the political process? The political process basically is matured. Now we are at a time in which the decisions are going to be taken. Well, if it is not going to be the Council of June, it's going to be in July, but in any case by the summer. And basically the European Commission is going to be given the mandate to proceed on the most important issues. There is going to be an action plan that the Commission will draft, and then with regulatory or other type of actions that will be proposed for approval. Basically, these things that are going to enter the action plan, as you see in the slide, are on the powers of supervision, on you know, elements that help the revival or let's say the development of secondary markets for the NPL. There's going to be actions that tackle structural issues like insolvency, which is an important thing. Remember that insolvencies, we have 28 regimes. Just to create a specific class of debt for banks, it is considered to be something you know, very, very innovative in Europe. But now this is a road where standardization, harmonization is going to be, I think, much more prominent in the next years. And then, of course, it stays on the table. The first step, we need the banking system to restructure. So in one way or another, I think that moral suasion or voluntary adaptation of the business by banks will need to happen for the strategy to take us all to some success. Yesterday we were discussing with some colleagues here and saying, when will this be solved? Somebody was saying 2 years, somebody was saying 5 years, somebody was saying, I don't really know. I don't make any prediction. It's just that obviously we all know that the situation is a sort of not stable equilibrium at the moment, so the sooner we better. But the message also to the Americans that, you know, Europe maybe takes time, discusses, but things are moving, and we're at the time where, you know, in the next month changes and improvement should really come. Thank you.
Questions?
Hi, thank you for the presentation. I'm a bit worried about NPLs. I'm Italian. And my first perplexity is about the timing, because we are talking, the debate is quite heavy about this issue. We are talking about the secondary market for the junior bond, but there is still a lack of the development of this market. We talk about the asset management company, but I think it must take a long time to be set up. We are talking about the investors in the market that demand a very high rate of return, about 15%, to buy these portfolios. So the authorities are asking to the bank to the leverage as soon as possible. And maybe Italians will be the first movers in this framework. So maybe they will be more penalized, I think.
First movers, and yes, it's obviously a problem that exists. I think that the situation. I've been very frank in this presentation. That's why I had to have a formal disclaimer that it's my own opinion, etc. But I think that already in previous occasion, it has been pretty surprising also to us working in the institution how once there is a consensus that something needs to be done, how quickly it can be done. So basically, my impression is that my impression is that really in Europe you have a switch on, switch off type of mode. It doesn't go gradually. There is a moment in which, of course, then you have the political context, and we are all seeing here what is going to happen in September in Germany. But I think that now already at the point where we are, something is going to be done very quickly. Regarding the specific case of the Italian banks, I think that what we are really talking about here is not the will to penalize the Italian banks and having them being the first mover, but there's been a sort of perverse dynamic into a denial type of process by the Italians. This is what we have clearly perceived over time, that the message coming from Rome, both from the private and public sector, was also the thing is under control, and then it's not anymore under control. So in a sense, there is also, a tactical element into this, that you need things to move also in Rome, no? And so the fact of being pushy also serves that purpose. And then I think that in several occasions, Monte Paschi, I think, is the last one. The European institution has shown the degree of proportionality and the degree of, let's say, also flexibility in understanding and the situation is not, all gray, all black, or all white. I mean, if you have the point of view of some of the integralists of the BRD, the solution of the Monte Paschi is completely jeopardizing the framework. And Mario Naves explained yesterday that no, it's normal that in Europe we have a range of solutions because they must adapt to different countries, different situations. And nobody is an Ayatollah that wants, to punish anybody else. It's just finding the right solution for the right situation.
May I ask a question as well? Oh, may I ask a question? Could you go back to the very first set of slides? Because I think it speaks to a very important difference between the U.S. and Europe. I think it's the one before this. It's the recognition of NPLs over time. Yeah, okay. So you had the median NPL ratios spiking after the great financial crisis, right? Specifically in 11, 12, 13, 14. Now, I understand Europe was in a much deeper recession for a longer period than the US. But if you would superimpose on a graph like this the NPL ratio in the US and its coincidence with recessions, you will find that the U.S. situation sometimes even precedes the recession or is coincident rather than after the financial crisis. So you have to ask the question, why? Basic economics, finance, for SMEs, for large companies, are, in my opinion, the same throughout the world. When you have trouble with selling your product, with making a profit, you're going to have difficulty paying back your loans and you're going to fail. However, if the banks try to keep you alive artificially when you cannot pay yourself by making new loans, then they defer the NPL. This is going to change under IFRS 9, right? You're going to have to recognize those loan reserves, not on a default, but on a downgrade. And the downgrade will surely come before the default. And so you're going to, I think, move much more toward a more coincident relationship than exists now. And so that relationship between recession it should become more, I think, normal in the European case than it was before. And you won't have, and it's hard to say, the concept of zombie companies continuing to exist, which will be painful in the short run, but much more healthy in the long run. So I think those slides are almost misleading for what will be in the future, even though they are accurate now.
I fully agree that is striking how the the dynamics in the US has been different from the EU. I'm not so sure that the accounting is the only thing, because, for example, for banks that are on the IRB, you already have these prudential filters that if the model works, this should be the assumption, basically at least partially should produce the same thing that you have with IFRS 9.
If they make a loan, they're not in arrears. They don't downgrade it either.
Yes, but the idea is that you have the need to recognize into your capital requirements a deduction for your expected loss, considering all the time of the loan, if you are on the IRB. If instead you are on the standardized, you don't have the. So the difference, I think, is that what is going to happen is that the effect is going to go more pervasive. There were already let's say elements of what you were saying, but now it's going to be more pervasive. But there is also other things that I don't think will go away, like the fact that the really in Italy in 2008 and 2009, I remember very well the discussion. There were influential speakers saying there's going to be a wave of troubles coming, and nobody could see it already. And the year that one could really see it was 2011, 2012. And then if you look at the SPY, there is 1 year later, because the year that really the NPL started soaring in Italy was 2013. And there are some elements for that. Of course, the move to the single supervision helped a lot in recognizing these things. There were somehow some delays linked to let's say old style type of supervision, I don't know, but there are also issues linked to when you produce the balance sheet. I mean, and when really the internal market for some countries like Italy really started having problems, because you have, contrary to the US, you have families which are wealthier, so if something goes wrong, you can enter with a personal guarantee, and the loan can be serviced, and you find a way or another for some time. And then, so it's not as immediate, I think, in the kind of structure as in the US, and it will never be. There are structural elements that will remain. So, but I fully see the point that what we are trying to do here is really with this set of actions to create a system that is able to react, so more resilient, like Francesca Campolongo was saying, and doesn't get stuck on the situation so that then we have a problem going on forever. And
Yeah, exactly. You need something to react, because right now it's gone the opposite. What you have is too, it's much too late to react. It's already a crisis. And then you see finally the NPLs rising, and you say, oh my God, those banks are in trouble. But they were in trouble several years before. So it was not forward-looking at all. It was not pro-cyclical. And so maybe the new system will move in that direction. But as long as you have the banks still having control over whether they call it an NPL or not, you're going to have this problem. But maybe it'll be less with IFRS 9. But still, the banks have to downgrade their loans. And the IRB system must, show that. And that's the big ones. Anyway, it's fascinating stuff.
Thank you.